T3 Live, and if it's Tuesday, it's the Wheels in Motion show, and what a good day to have it. If you didn't get a chance to see it, on Friday, my market wrap up, I talked about the importance of watching different sequences in time, about where to be at the right place and what's going on. And today's going to be a good little example of that. Today's the beginning, it's the second day of the month, all right? And here's your broadening formation on the 30 spy. We'll get to that in a second. But what you want to know is since we're starting over a new month and a new week, right, it's a little different than last month, where the month was pretty much blood red all month. Here, and the weeks blood red and then closes on the lows. And so like I said, is like when things close on the lows, everything's going to look bad, right? No two ways about it. So the question is, how are you going to turn something like that around, right, and start to make it look good? I'm going to show you right here. Now people say turn around Tuesday. The fact is that any bar to the next bar can be a supposed turnaround, because all you're going to ever do is confirm or negate any move, right? And so what happened was on Monday we get hit, right? SPY takes out the lows and goes down. Something called exhaustion risk. Anytime you go into lower lows or higher highs, you're at risk of profit taking or whatever and going back the other way, right? We want to be coming back through previous ranges, right? And so what had occurred here is also in QQQ got hit harder, and we knew that, right? So coming into today, everybody's like, oh, looked bad over the weekend, and then we were down on Monday, so everything looks bad. Now, how's that going to change? And I'm going to show that to you right here. All right, there's only so many ways price can reverse, right? And one of them is this. You go in one direction, and the next bar takes out the other side in the other direction. So like to me, it's called a 2-2. A 2 means an inside bar is a 1, all right? And taking out one side is a 2, and then taking out both sides of previous range is a 3, as I'll get to that. You can see this bar was outside, right? And you can't do that without poking down first and coming back through, right? That's stuff you're going to want to know about, right? Okay, so this is a 2-2 reversal. It goes down and then comes back. The reason that's important is when this occurs. It's happening in the second trading day of the month. What that means is this was your monthly and weekly opening. So you're changing the direction of the price from where it opened and the direction from here, taking it back out, right? So did we know about that? We did. That's something very powerful you want to know about, and that's why a lot of people got cold, caught, frozen, deer in the headlights, because they don't know what's going on. Now, when that occurs, right, then we look for continuation patterns. It starts going up. So here's your inside one. That's an inside bar. We go up. It tries to counter it by coming in, then reaches equilibrium by going inside. We've had corrective activity. We've come down. Now, boom, right back up. And you see this? Here's the inside bar. Takes it down, stops them out. Boom, you're in again. So there's a lot of ways to get in on this once you knew what you're looking at. Also, when I talk about the outside bar, all right, it doesn't have to be a bar that you can see. And what I mean by that is that time frame software is going to present bars the way it wants, right? But because you could have a different opening for any different bar, charts will look completely different. That's why you don't want to try and read a chart. You want to analyze the data. So if you see if this was a 2-day chart, this and this would be outside of these. Do we know that phenomenon exists? We do, because outside bars exist. Therefore, once this starts coming through here, we're taking that out. Now, whether we're going to take that out today or not, that's a tall order. But when we started climbing, 280.04, 280.05 for sure, right? And so you look at the 30-minute, back again, the broadening formation is going to look like this here. And so how I know that's an outside bar that you can't see besides of those 2 days, if you notice how I draw the lines here, all right? From this point to this point, if this were one bar, which is a part of those 2 days, it would be completely outside of all this, because we know that phenomenon exists. And that's why we look for these continuations. Here you go, inside 30, boom, and take that out. So for tomorrow, it's a matter of keep going. So also what we can see here on the weekly, if it keeps going, it also took out the lows. So we have a chance of going outside bar of that. Whether we do it in 1 week or we do it in combination is irrelevant because it's still going to be an outside bar so long as we don't have a reversal against us, which we still could. Right now we go out on the highs and now suddenly everything looks good like a reversal. And that could change if we took this out to tomorrow and got destroyed. That would change all that. And that's why we compartmentalize and break it down to the 60-minute and the daily and the weekly and the monthly to make sure all this stuff is going. So once we knew about that, the good part was QQQ had a ways to go to do it, right? That took some time before it did it. So that gave us some more time to go looking for other things before they broke instead of gapping up like SPY, right? Things that still open in the range. One of them be a Tesla. Here. 2 down, 2 up, and it opened here. It didn't break that until 186.68. There's plenty of meat on them bones after it got up there. And the good thing about that, then it gives you the potential outside week, and all it's got to do is tick over 195.01. And as far as we know, that's still working. And let's say they even missed it. You're like, I missed it. It's going too far. I'm like, no, you didn't. All you have to do is wait for one of those reversals. You see this? 2 up, down, inside bar right there above 190, 170, and you still got about $2 out of that at the end of the day. So there's a lot of ways to get in on this stuff, but you want to be able to know this stuff because this is going to tell you exactly where to be during a day like today or on Friday. If you go to NVIDIA here, NVIDIA does this. Is that the same 2-2? You bet it is. Does that turn the week and the month back green? It does. Is that something you'd want to know about? Definitely. Do we like to come back to previous ranges? We do. Why? Because anybody who's been short this thing down through here, people will be short against certain pivots or where they got in. I'm going to short against the highs of the day, that day, that day, that day, that day. And that's where you come ripping back through because as time frame continuity, which means that if we're trading higher than the openings of all the major time frames, that the more aggressive participants are the buyers. They're taking the offer. They're not sitting on the bid. So if that's true, that has to be occurring. So as you stop more people out on the wrong side, you turn them into buyers, which makes the move more powerful, which is what you're seeing here. And so NVIDIA potentially could go outside week here, because we know outside bars exist, and that's 147.18. We can be looking for that so long as we don't have a reversal against us on the shorter term stuff. And if you go to the 30 here, you can see it right here. Ticks down, inside, down, down, 2 back up right here, even if you missed it. This is also called a momentum hammer. You can go after that. What that means is anybody who was short or shorted the opening or stayed short and didn't cover down in here and it comes back up on them, boom, everybody's a buyer and shorts are covering, and that's where you see acceleration. Stuff like that. We also knew that SMH is doing that on the weekly. There's your reversal on the weekly. So that gets a bunch of chips going when you can see that reversal on the weekly basis when all this thing is occurring. Another thing is TTD. We can also look for anything that's tech related that's going to go inside week to the upside. And this was in my weekend video. It was also in the halftime show, so I told you about it a couple times. So as soon as that breaks, right above 204.72, when this market reversal is on, you're in. So I've had some folk get that, 204.72. Not bad, right, for one day's work, 18, 19 bucks, whatever. And still good. And even if you missed it and you wanted to go down to slower stuff, you can go down to the 60. Inside 60 right here. Then if you go to the 30, here you go, your corrective activity. 2 up, 2 down, you're inside 30. Did I miss it? No. 215.75, still plenty of meat on them bones when they're running like that. So another good one there. Another thing we were looking for too, in my nightly video that I make it every night, was things that were taking out last week's highs yesterday when everybody thought the market was falling apart. Because if we turn around, those guys are already going. And one of those APD. And so APD taking out last month's highs. Here's an inside bar counter with hammer. That's a rev strat. 1, 2, 2. And the reason that's called a reversal rev strat is because you have an equilibrium inside bar, which means both sides are equal. They attempted to take it down. And when you come back through this range, they thwart the equilibrium and go right back up. Did we know about that yesterday? We did. It was in my weekend video. It was in the video last night. You can see how they stuck it to them good here. All right, that happened yesterday. Outside bar extension here, 204.85, boom, there's $9, right? Which triggers the week and pulls full time frame counter to the upside. IFF was also in the video last night, right? You can see this weekly. 1, 2, go. And it took it yesterday. It was already going. See this? Boom. There you go. And there's your outside day. 136.11. You take it above that. And there you go. 143.45. ECL. Do we know about this? Yesterday we did. Outside bar up. Weekend video. And last night's the inside month to the upside and the inside week to the upside, because one of the things we want to use market psychology. So if you recall what SPY and the broader averages did last month, right? This and this here, it's a different story. Now, let's say that you're short something and the market's tanking and it doesn't go down, right? You can stay short on the belief, and I know you do, on the belief that it's going to catch up to everything else. The market's falling apart. My thing's going to just waiting its turn. Well, when it doesn't happen and you have a new month or a new week and a new day, like I just showed you on the dailies, we're going to stick it to you, right? We want to look at, one of the things we want to look at, anybody taking out last month's highs. Yum Brands right here, right out the chute, 103.48. Stick it to them right away. Right? Anybody who's staying short, hoping this thing rolled over, just got steamrolled. Target coming up here as well. You can see that. And this is another thing you look for: the 2 up, the 2 down, boom, to the highs. Motorola. Taking out last month's highs after taking out the inside week. So this is how you look for a continuation. Up, inside, go, right? Every reason to believe that's going to work when this market turns around. Like I said, these guys got what they wanted. Market started to tank. There was technology tanking. It's going to be the end of the world again. And then, boom, you stick it right to them. Knowing where you want to be is very important always. Molina Health here is taking an inside month to the upside. Right? It's already taken it out, right? And it just starts running, so you can look at stuff like that, and that's why you can watch stuff like ANTM, see if that's going to join the party here on the month with XLV. To see if the XLV still has room. And so if those things are already going and XLV takes this inside month to the upside, those things are going to really jam them. So we'll see how that goes. So with the monthlies too, you've got Snappy. Snappy, this is what we look for: the 2 up, the 2 down, and right there above 12.19. There you go. Nice little percentage move to start her off. ZTS. And you can see anything taken out last month's highs. And this took out the month's highs, 104.41. See ya later, bye. And then you get your corrective activity a little on the weekly by going 2 up, taking that out, taking those lows out. Boom, right here. 103.57. It gets you in right before the monthly break. GH. This is in the halftime show today. A lot of the stuff, TTD was in the halftime show. I do a halftime show every day, or Monday through Thursday, on our T3 Live Facebook. So I'm going to tell you about this stuff when it's happening during the day. And you can see this GH, bright green, takes out last month's highs, and off she goes. So some good stuff there. Texas Instruments. Texas Instruments still be inside month, but you can see with the SMH break, right? The daily had already started to come up yesterday. When there was a tech wreck, it tried. So if it was going to fail, it would come back down through here. But when this came in, when this comes back through, we knew SMH was taking the 2-2 week. So 2 here. 2 down, boom, Texas Instruments. So one of the flaws that people will have when they're charting is they'll only look at one time frame. You'll see guys on Twitter posting daily charts all day and all that kind of stuff. You always want to look at multiple time frames because that's going to tell you exactly what's going on, right? Monthly, weekly, daily, 60, 30, 15, 5. And we even have people go down to the 5-3-1s when you get really good at this, because when you see the monster moves you had in TTD, Tesla, and then some of our really good guys, Coop. And this was a slaughterhouse. So Coop does this. Gaps up. All right? Now, the opening price is what you want to know about. That's the direction the price is traveling. That's why it's important. When people say, if it closes over something, that's irrelevant. Where the close is irrelevant. So at this point, when it comes up and comes back down through here, you hit it right there. Get short. Smack this thing right on the way down. All right? So it comes down. Then it goes inside again. Now, remember, anytime you go into lower lows, you get into exhaustion risk here, right? But you could still hit that down there. And then when this closes out, cover part of that. What's important to understand is the change and the control. The 60 minutes always in control. It's a matter of how much control it has compared to the bigger picture, right? But the 60 is always in control. So anytime you have these lower lows, because we know broadening formations exist, right? That once you come back into a previous range, that you can start ripping when something occurs. You see this right here on the 30, the 2 down, the 2 back up, and they give you this on the 15. Here, you see this? I want you to look up into here. You see the time when things occur. You see this? That's 11:30. My 60's update at the bottom of the hours. Yours should too. That means we got a new 60 coming and an inside 15. Can we take that to the upside? Def. And then you get this. Now we flip her back green, back through the range. Then you get the 15s here to add to it. Right here. And then give me measured move right here. Boom. And you can see this nice entry here, 101.50. This thing goes out at 112. And so this thing right here, I mean, you can make $8-9 on the downside, 10 more on the upside, make more than this thing actually moved. And this is the kind of stuff that once you get good at this, you can do. And because when you see any other type of trading, you're not going to see anything like this. I mean, you know that, all right? But it all makes sense. And that's why I wanted to talk about that tonight, because what we're going to be looking forward to tomorrow and going forward this week, now that all this stuff has occurred, it still left us a bunch of inside days, right? There's some pieces to this puzzle we still want to figure out here. So something like AMD is an inside day. And if it takes that to the upside, right, it'll take last week's highs out. It's also an inside month to the upside, AMD. If you look at something like Microsoft, all right, a little different. Right now it's month and down, right? Right now, weekly, it's still red and below last week's lows. So if this inside day broke to the downside, whole nother ball game, right? Now this is right now it's trying to change it back up, right? So we'll have to see. So all these pieces parts are going to come together. You got Twitter, inside day, but you're not near taking that out. You could do it, right? But if you don't, you're still red on the week and 2 down. You're still inside month to the downside in Twitter. Go to PayPal. PayPal, that month still down in red. Weekly, still red, right? Inside day. Which side did we break on this thing? Because just like on yesterday when things closed on the lows, or especially on Friday, and now today they all gone on the highs, everything looks good again. Well, if you start getting things that are taken out, if we start backing off tomorrow and going inside day in the broader averages, anybody taking out today's lows is something I definitely want to know about, because just like that market psychology, they got what they wanted. Huge rally in the market. If your stock takes out today's lows tomorrow, you're bumming. We're going to stick it to you. And so when you wonder who's taking you out, that would be us. Amazon. Inside day. Still red on the month and below last month's lows. Still red on the week, so it's got to change that. TWLO. Still inside week, but red on the week. Which, because it's the month, it's going to be red on the week. Still inside, though. What's the next break of this inside bar? And then if it gets out of here, it's going to be strong enough to take this here. Okta. Inside day. Here's your weekly opening. That's a lot closer to taking that out. All right? Your weekly opening, it's right there. Either way. All right? Google. And Google, from last month, did we know it was in trouble? We did all month. That was a 2 up, 2 down on the month, the whole month. Now, you gap down, right? Now the inside day. So either side of that gap, Google would look like garbage if it takes this to the downside, and it's still sitting there. Vive consolidating a gap up here, inside day. And so that would just put her into the stratosphere, new highs. And so you have risk. And so when I talk about exhaustion risk, if this goes into new highs, you want it to stay up there. Right? Otherwise, you get stuff like this. Hey, it's breaking into new highs. I'll buy it at a pullback. Well, you bam, and you come back to previous ranges. That's what I mean by exhaustion risk. New highs and new lows. You want to be coming back to previous ranges. Splunk. Inside day, Middle of the range, still red until it takes that out on the week and the month. Autodesk. Autodesk here, and as of right now, on the week, it's trying to get back into that weekly range. If it breaks back down, this would be the inside week break back down below 159.26, or we're going to try and jam them all up. These are all the kind of decisions that people can be making tonight, or at least when we open and see what happens. So here's your Shopee inside day. Still handily inside month. And on the week, it's still a 2 down, but it's back into this range. So what you'd want to know about if Shop's going to give it up is breaking back below 270.52. Cyber. And Cyber is 2 down on the week. Big. How are you going to get out of there? That's a nice move to get out of there. But once again, when people they get caught up in looking at something and say, oh, it's overbought on the shorter term. Well, you might remember these guys used to say that, hey, the oscillator's overbought. And when they said that, they said it down here. They said it down here is when their McClellan oscillator was hitting highs. We're right at the beginning of the monster rally all the way back to the new highs. So you might want to throw that out. And let's see, just a couple. We got some for fun beyond. That's an inside day. It's an inside day, so this still hasn't picked a direction for the week. The reason this is important is because you have an inside day, an outside day, and an inside day. What does that mean? That means you've had contraction of volatility, expansion, contraction. Now, if that series continues, tomorrow's real move. We'll find out what they really want to do with this thing. So I could go through a lot more, but the thing is, it's a matter of watching these sequences play out. Now, because we've had this big rally, a lot of things would have a tough time taking out today's lows. But it doesn't mean we can't go inside day tomorrow and then take them down, or all these inside days I showed you, right, is what we're going to be keeping an eye on. But it's important to understand the sequence of what you're looking at and why you're looking at it and why you can expect it and how far you can expect it to go. So on that note, if you haven't watched last Friday's video, I would do that. It's similar to this, but this is the kind of stuff that puts you in the right place at the right time always, right? We always know what's going on, and we always know where to be. So inside days for tomorrow should be an interesting week. Can we keep going? We're going to find out. We don't have to guess. We just follow the strat. All right, that's going to do it for today. I'm Rob Smith in the Black Quant VTF here at T3 Live of the Wheels in Motion Show.